Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within company filings. Today we've got an amendment to a quarterly report for AST SpaceMobile, and let me tell you, this filing is all about adding a little detail they missed the first time around, and trust me, I might just explain a few things. So we're looking at an amendment, a do-over of sorts, to their Form 10Q report that covers the period ending June 30, 2025. Think of it as the company saying, oops, we forgot to mention this important bit. The company in question is AST SpaceMobile Inc. and they're in the business of, well, space mobile communication, trying to connect regular phones directly to satellites. Pretty ambitious stuff. Now, before we dive into the new information, let's quickly note what was already reported. As of August 7, 2025, they had over 269 million shares of Class A common stock, about 11 million of Class B, and over 78 million of Class C. This gives us a picture of their outstanding ownership structure heading into this amended filing. Alright, so what's the big reveal in this amendment? The company explains that this filing is to revise Part 2, specifically Item 5, Other Information, to add a Rule 10b5-1 trading arrangement. This was for a key executive and it was accidentally left out of the original filing. This section is all about trading plans for company insiders. These are special plans that allow executives to buy or sell company stock at predetermined times, even when they might have inside information, giving them a legal shield. It's a way to keep things fair and transparent. The key piece of new information here is about Dr. Hoen Ya, their Executive Vice President and Chief Technology Officer. Back on June 12, 2025, Dr. Ya put in place a specific sales plan for company stock. This plan is designed to comply with Rule 10b5-1, which means it's a pre-arranged way to sell shares. Specifically, this plan allows for the sale of up to 160,000 shares of AST SpaceMobile's Class A common stock. This plan isn't just for a week or two, it's set to be in effect until September 16, 2026, or until all the planned sales are completed, or if the plan itself is ended according to its rules. This gives us a time frame for potential selling activity. This amendment, while seemingly minor, is actually quite telling. Having an insider like the Chief Technology Officer set up a plan to sell a significant number of shares, like 160,000, can be interpreted in a few ways, especially given the company's ambitious but capital-intensive business model. It could indicate confidence in future sales, or it could signal a need for personal liquidity, or perhaps a diversification strategy for the executive. Without the financial tables directly showing sales activity in this specific amendment, we're primarily getting insight into the planning of these transactions. Normally a 10Q would have detailed financial statements and tables showing revenue, profits and cash flow, but this is an amendment to add a specific disclosure. So we don't have new profit numbers or balance sheet changes to analyze here. This filing is focused purely on corporate governance and trading disclosure. However, understanding these insider trading plans is crucial for anyone following a company, especially in a field like space technology where capital needs are immense and progress can be lumpy. It's about reading between the lines of these disclosures. The fact that this was an omission, even if accidental, highlights the importance of thoroughness in financial reporting. When we look at AST SpaceMobile, they are in a very cutting edge, but also very expensive business. Building a satellite network that directly communicates with standard mobile phones is a game changer if they pull it off, offering connectivity everywhere. But the research, development and deployment costs are astronomical. They are essentially trying to build a new cellular network, but in space. Competitors are also emerging in the satellite-to-phone space, like Starlink with its direct-to-cell service, and others like Link Global. For AST SpaceMobile to succeed, they need to not only prove their technology works reliably, but also scale it cost-effectively. This means they will likely continue to need significant capital infusions. The decision by an executive like Dr. Yao to have a pre-arranged plan to sell shares can sometimes be seen as a signal by the market. It's rarely a sign of distress on its own, especially with these 10b5-1 plans, but it does mean that a portion of the company's stock will potentially be hitting the market over the next year or so. Such sales, especially in large volumes, can put some downward pressure on the stock price if demand doesn't keep pace. What we can infer from this filing is the company's focus on compliance and transparency, even if it's through an amendment correcting an oversight. It also underscores the personal financial planning of key executives in relation to their company's stock. Dr. Yao, as Chief Technology Officer, is obviously instrumental to the company's success. Their personal financial decisions, when properly disclosed, can provide subtle clues about their long-term outlook. In my opinion, AST SpaceMobile is a company playing a high-stakes long game. The technology they're developing has the potential to revolutionize mobile communications, making connectivity truly ubiquitous. However, the path to profitability is long and fraught with significant capital requirements and technological hurdles that also on its ability to manage massive capital expenditures and navigate a rapidly evolving competitive landscape. For now, this amendment is a procedural step, but it's a good reminder to keep an eye on executive trading activity as a small piece of the puzzle when evaluating such a growth-oriented, capital-intensive company. And A's amendment is a personal portfolios, but also on its ability to manage massive capital expenditures and navigate a rapidly evolving competitive landscape. For now, this amendment is a procedural step, but it's a good reminder to keep an eye on executive trading activity as a small piece of the puzzle when evaluating such a growth-oriented, capital-intensive company. Alright, that's our breakdown of this AST SpaceMobile amendment. What's your take on these filings and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.